Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. This is Henry and today is Wednesday, November 17. The time is around 1:30 a.m. GMT. So here we today are going to be looking at the chart of the euro dollars. This is a 60-minute chart here. Now we can see the pair is extending to the downside in an impulsive manner. Right, so we got this with 1 2 and now within the wave 3 to the downside. So suffice to say here, it's simple as long as the rally is expected to fail in 3711 swing against 11610 for more downside. But I think so the short term is very simple. We should see for the downside, that's it, right? As long as it stays below 116. But I want to take some time to take a look at potential target on the downside, as well as what will be sort of the real sort of the main trend in the euro dollars, and also what could we expect in the medium term and the long term. Okay, so if I zoom out now to the weekly chart, now I'm not gonna even put any labels here, but what I want to point out is this long-term trend line that started from June 2008. So this is absolutely a monster trend line here. Is a 13-year trend line that has been broken to the upside. So despite what you feel like the narrative is saying, that the dollar is strong because of inflation, the Fed is going to be forced to hike the rate, and so on and so forth, technical suggests otherwise. Technical suggests we broke out above 13-year trend line, and so now it looks like it wants to retest that trend line, right? So the trend line is around 111. So let's put it around 111, between 111 and 111.50, something like that, right? Or let's just call it 111 to 112. That should be the potential kind of target as well as support for the euro dollars on the way to the downside. Okay, and so shorter cycle, then what we should be looking at is for the downside, but in the medium term, long term, we're gonna be finding a pretty I'm sure this should be a pretty significant support from the euro dollars right here on the way down, and it's not gonna blast through easily this 13-year trend line that has been broken on the upside. So we should be slowing down at minimum, right? We should be slowing down at minimum, if not outright trend reversal to the upside, right? And coincidentally, there could be some kind of announcement for the next Fed, right? The Fed's chairman, right? The Fed's chairman is going to be appointed within 4 days or so. So just look at that as a. Usually, they basically use the news. The market maker use the news to basically make the move and to provide justification and narrative, right? But technical suggests you should be finding support around 112, 111 to 112 if it ever go and reach that area over here. Also, if you compare the speed of the movement here, you can see this, it does look impulsive. This one also kind of look impulsive. And look at the time it took from here to here, and the time it took for this move down, and the time it took here, and the time it took here. Now you find out that this one, for example, from December 2016 all the way to March 2018, so that's around 15 months, whereas from March or February 2018 all the way to March 2020, right? So that is already more than 2 years, right? So in other words, it took more time to make this move compared to this move, whereas this move is actually smaller in size to this move. So that tells you that the move up is more powerful than the move down, because the move down is smaller in size and it took much longer time. Same thing, this move up, if you compare to this move down, the recent move down, this one took less time, this one took longer time, and this one is only so far only 50% correction of this. So that tells you actually the stronger move, despite what you feel day to day, hour by hour, and narrative and so on, and social media, despite what you see, the technicals is telling you uh, like the real thing, right? The technicals is not lying. It's not lying. It's not influenced by human emotion, and you can really look at it and trying to quantify it. And this tells you that the more powerful move actually is to the upside, not to the downside. Okay, so back to the shorter cycle, then yes, we should be looking for the downside without question. We could see a little bit more downside, but I expect target around 111, 112 should provide us with a nice base. So expecting at least some sort of reaction. If not outright reversal, then at least some sort of previous rally, some sort of previous reaction, it can be expected when we hit that area over here. Okay, so that's the update here from the euro dollars. And as always, if you do want to get regular updates, you can check our service. We have 14 days trial, and we cover forex, indices, and commodities. And I'll see you all again next time, and have a nice day, everyone.